What is going on, investors? Hopefully you guys are doing well out there. That is right. It is finally a Friday, and it's finally time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. We are on the eve of NVIDIA earnings, and we had a lot of these stocks kind of reverse some of the gains that they've had over the past week or so since the election. So we'll talk about some areas of pullback and some areas where you could potentially buy the dip on some of these. Let's kick things off like we always do with Meta Platforms. Start of the week at 580. Like a lot of these stocks, drifting lower, down 4.6% to finish the week at 554. The company is slashing its prices of its ad-free Facebook and Instagram in the European Union. What you're going to find over a series of press releases across all of these companies is the European Union has got a heavy hand on the regulation side. And if they lighten things up here in the United States, it's going to make investment here in the United States a lot more attractive than pretty much anywhere in the world, certainly compared to Europe. And they're going to be offering less personalized ads in the European Union, as the company probably found that a lot of people weren't willing to pay for Facebook and Instagram. So they slashed the prices by about 40%. Now, Meta is going to contend that personalized ads are far better for the user from a perspective of them and also from the advertiser. And we'll see how Meta continues to handle the regulation that you have there. Now, Meta is going to roll out ads on Threads early next year, as the company is touting that they're seeing 275 million active users. That's at the end of October. And that the company is seeing about 1 million people sign up for the app every day. Occasionally I'm on Instagram. I give myself about a 5-minute limit to surf the old Instagram every single day. I do notice that Meta is integrating it inside of the platform. I think that's the play with this as a standalone app for a $1.5 trillion company. Probably only moves the needle a little bit, but if you can continue to weave in the integration with Threads, maybe potentially even into WhatsApp and Facebook as well, two apps I don't use rather regularly, well, the company might have something here from an ads perspective. Now, Baidu is going to unveil some AI smart glasses, and they unveiled a new text-to-image generator tech at an event. Now, I am attending the Consumer Electronics Show in January. That is about a month and a half from now. Remember at last year's CES, there were a lot of smart glasses, but I think that is going to be some of the tech that you see have a little bit of a leap from a technology standpoint, probably even more and more companies offering that. I'll certainly talk about that when I'm at the event in Las Vegas in January. Now, Meta is going to face an FTC trial over Instagram and WhatsApp acquisitions. Now, some of you probably even weren't investing in the stock market when the company acquired both Instagram and WhatsApp. And this is what's so frustrating to me as an American from a regulation standpoint. This company was cleared to buy these companies at the time. And at the time, they were actually criticized for paying as much as they did for Instagram and certainly WhatsApp. It was a gigantic acquisition, and Facebook received a lot of criticism. I don't understand how the FTC can come back later and say that the company bought these two apps to squash competition, when at the time the FTC and certainly investors somewhat criticized Meta, that time Facebook, for acquiring these companies. Hopefully the next administration that we come into the United States could maybe have a little more sense than the current one. Now, moving over to Apple, start of the week at 224. This one just sliding sideways. Finished the week at around $225 per share. Now, Apple is planning to unveil a smart home camera by the year 2026, and it's going to continue to try to boost AirPods' health features. You might know that the AirPods released this year with a hearing aids function, which gives them the ability to give people with maybe some hearing impediments the ability to use them as hearing aids. And the hearing aid market is like a $10,000 hearing aid. Well, Apple coming in there with obviously versions of the AirPod, which costs just maybe a few $100s. Now, as it relates to the home camera that they're launching, the current market looks like it's about 30 to 40 million units annually. It's dominated by some generic kind of Chinese knockoffs, but you also have Amazon and Google with their Ring and Nest brands, which they brought in via acquisition. We'll see if Apple is able to carve out a market, but according to internal documents, the company is looking to ship about 10 million units, which currently would be about a third of the market or a fourth of the market, depending on how you estimate it. Now, Apple's margins could certainly be hit well, across all of tech by tariffs. And those certainly is a mystery as it relates to the former president that is soon to be the current president in about a month and a half. He has campaigned on the idea that he's going to slap, I think, a 60% tariff across all Chinese goods and another maybe 10% tariff across goods across the world. We'll see if he even crosses that bridge. He certainly campaigned on that in 2016 and kind of softened his tone and renegotiated as time goes on. Also, what a lot of people don't know is pretty much all of the tariffs that Trump put on during his first administration were not only carried over into the Biden administration, but they were actually expanded upon, including the 100% EV tax for the country of China. So whatever Trump does, it'll simply be a continuation of Biden and maybe an enhancement there. And certainly if there's a 60% tariff coming across from goods from China, well, that will absolutely wreck Apple among many other stocks. Now, moving over to Amazon. Start of the week at 208, slipping down about 2.7%. Finished the week at 202. Now, the company also, Smartglasses, a theme on today's show, as Amazon is developing its own version of Smartglasses. This is to be used internally to help its drivers shorten delivery times. If you've noticed, when these delivery drivers pull up to my house, I do see they've got some kind of like phone, like tablet type of thing. They have to take a picture. They're constantly checking it. It's probably telling it where it needs to go, where the package is. Well, if you have that feature on the driver's glasses where they can just look in the back of the truck and it's telling them where the package is, they can also maybe take a picture of the package that they just left at someone's door using just the glasses. Maybe the glasses even do it automatically. Well, this is something that could speed up time because, again, when you're delivering millions and millions of packages a day, if you can shorten the time to deliver by even a second, maybe even 10 seconds, well, that obviously can save and drive a lot of efficiencies, and that's what Amazon is trying to do. This was an under-the-radar headline for multiple companies. AWS is working on a major deal to provide IBM with NVIDIA GPUs for its AI. The deal is valued at $475 million, nearly $100 million a year. That is because the $475 million is over 5 years. This would provide IBM access to AWS's servers, which would be equipped with NVIDIA GPUs. IBM is already using Amazon's EC2 servers, which shows that they probably have a high satisfaction with it and they want to expand it. This is not only bullish for AWS, it's bullish for NVIDIA, probably slightly bullish for IBM, because if they're making this type of investment, well, they're probably seeing a return on that, at least in the short run. Now, Amazon Zoox. I think next year we're going to have the year of the smart glasses. That is probably going to be the large consumer device, but we are also probably see a big deregulation effort as it relates to approval for robo-taxis, as Tesla has cozied up to the upcoming or incoming president. And you got to imagine they are going to see a rapid clearance to have these robo-taxis roam the streets of large cities. And Amazon Zoox now is beginning testing of robo-taxis in the great city of San Francisco and also on the great Las Vegas Strip. So you've got multiple companies. You obviously have Google with a large lead in Waymo. We'll talk about that here in a moment, but also Amazon and Tesla. I think once you have the incoming president come in, he'll probably throw Elon a big bone, and that will unlock that market even more. Now, Amazon is going to roll out a $20 or less, quote, haul store to rival Temu. This is going to have a lot of items featured for $20 or less, with the majority price $10 and under, and some as low as $1. And delivery times, instead of being your kind of 1 to 2 days or maybe even same day with Prime, this is going to be delivery time of 1 to 2 weeks. This caters to the segment of Americans that for some reason want to buy cheap Chinese goods and then wait 1 to 2 weeks to get this cheap item delivered to them. This is certainly not for me, but clearly Amazon's seeing some demand there, and my guess is they'll probably squash Temu at some point, and certainly tariffs and maybe even the new administration will help them do that even faster. Now, HIM and HERS, which is a overly pumped and hyped stock. There must be somebody here on YouTube or out there in the investing world that is pumping HIMS and HERS, because on every single one of their articles, you read the comments and it's a bunch of retail kind of low IQ investors talking about HIMS and HERS like it's this special things. HIMS and HERS is a no-moat, low-moat business. It is largely relying on the fact that they can acquire customers at a certain price and then sell them at a higher price. It is simply an advertising business. There's Roman, there's many other competitors out there, and now they have Amazon, because Amazon realizes that this game is really about customer acquisition. There is no moat, there is no IP, there's nothing that is special about the HIMS and HERS business. So Amazon, realizing that they have access to a bunch of customers, including Prime subscribers, that are now going to be able to get consultations for over 30 medical conditions, including on-demand messaging visits costing about $29 and video visits costing $49. Now, Amazon Prime members will also be able to get treatments for things like hair loss and erectile dysfunction for $16 per month for hair regrowth. And if you have that ED condition, you're going to be able to get that for $19 a month. Amazon slashing the prices on these types of things. My guess is they'll get into the Ozempic and weight loss and that type of business here relatively soon here. So HIMS and HERS dropping big time this week on this news. And this could also, we could have a broader discussion, which I probably won't get into heavily here, but there's always kind of this fear or this talk that President Trump will come in and end Obamacare or the Healthcare Act, and this could spur more uninsured to these types of offerings, and we'll see. So a lot to monitor as we move into next year on the healthcare front as well. Moving over to Netflix. Start the week at about $800, up 3% to finish the week at $823. We'll call it $824. Some big news out of Netflix coming later today. I know I'm going to be tuning into Netflix because we've got Iron Mike Tyson fighting the famous influencer of Jake Paul. I have no opinion on this fight other than I will turn it on and I will watch it. As somebody that grew up during the era of Mike Tyson's prime, it's just interesting to see. I hope he isn't seriously hurt if Jake Paul is in very good shape. And I saw him without his shirt on at the weigh-in, and he looks like a guy I certainly want to mess with. But a lot of people either love or hate both or one of these guys. And I think the winner is absolutely going to be Netflix. Now, the company has nearly 70 million monthly active users for its growing 2-year-old ad business. Now, a broader discussion too has to be had is we're seeing legacy media absolutely get hung out to dry as they lied to their viewers and they misled their viewers. If you had watched YouTube and been on X, you knew the results of the election. You knew Trump was probably going to win every single swing state, and you knew he's probably going to win the popular vote. But if you only watched CNN, MSNBC, you had the grandish idea that Kamala Harris was actually running a good campaign and had a chance to win. But I swear, there were literally YouTubers with like 1,000 subscribers that predicted the election very accurately. You also had the betting markets as well, which also proved to be very accurate. Now, that's not necessarily going to be the case for every election or the ones in the past, but certainly people that watch legacy media have been burned. And I think what this election also showed was long form podcasts, certainly like the Joe Rogan podcast. You also have the Sean Ryan show here on YouTube. Big fan of Sean Ryan. In fact, I bought his products before and was a fan of his channel even before he kind of turned it into this large podcast audience that he had. You basically had the candidates go across those podcasts. There was one Vice President Harris attended too. I think a lot of money is going to be flowing out of traditional cable, traditional news networks, and it's going to be flowing onto ad networks that are operated in part by Netflix. Moving over to NVIDIA. Start of the week at 146, and we're just 5 days from earnings for NVIDIA as it slipped down about 3% this week to finish at 142. As you can imagine, the company is in a quiet period. So who's doing the company's bidding is Wall Street, as they kept upping price targets ahead of earnings. We probably had a half a dozen price targets move higher, ranging from 175 up to 160, 170, 180, sometimes as high as $200 on the street. We'll talk about this a lot on our semiconductor show over on Equity Empire later this weekend. I'll give you a full preview of NVIDIA. I'll talk about how about 2 months ago, I talked about the company's earnings estimates and how wide they are. We'll take another look at those and the reason why I recommended getting back into NVIDIA maybe 20% ago, even though it was at the top of a technical pattern. Its estimates were really wide. And so we'll talk about some of the things that NVIDIA has to do on the upcoming conference call, maybe reassuring investors not only of this quarter, but hyping up future quarters as well. As the company is able to do that, I tell you what, we might be approaching a $4 trillion market cap as we move into next year. Now, the company disclosed new stakes in Applied Digital APLD, and it maintained an ARM holding stake, which the company NVIDIA tried to acquire the entire company, but that was shut down by regulators. And you also have SoundHound as a stake that NVIDIA has taken. Now, AMD is planning to reduce its workforce by nearly 4% as it's going to continue to target growth opportunities and continue to cut costs as it's continuing to obviously have a competition with not only NVIDIA, but Intel as well. Intel doing a lot of house cleaning. And so the two companies have to kind of balance that and maintain the margins that investors expect. Moving on to Google, start of the week at 179, down about 3.75%. Finished the week at 172.49. California dreaming, that's where I'm at. And so I'm no dreaming here, it's reality, but we've got Waymo opening up its robo-taxi service to everybody in the great city of Los Angeles. I think currently it was operating, when I was down there a couple of weeks ago, I think it was only in Santa Monica. Yeah, Santa Monica, Hollywood Boulevard, and a couple of other places. But now you're basically all of what's considered Los Angeles City or the Los Angeles area. That's a broad area. I don't know if this takes you out into the Burbanks and the Ontarios and other places. My guess is it will. This obviously broadens the service of Waymo. As we reported, I think a week or so ago, they were getting, I think, more than 100,000 active riders per week. And again, next year on the consumer side, I think it's going to be the year of the Smartglasses, where that'll become a product a lot of investors are talking about. We'll see from an investment standpoint where it kind of shakes out. But I think the robo-taxi is going to be a big, big thing. I think you're going to see rapid approvals of this type of thing. And you're certainly, if you're out here in a large city like in California, but other large cities across the United States, you are going to see these things roll out very, very rapidly. Now, Google Gemini, which is the AI offering from Google, officially launched its iOS app. Now, Google is no longer going to be showing political ads in the European Union. Again, we talk about regulation here in the United States, but it's even more strict in the European. And what I'm hearing from large investors is they are pulling their attention and their money out of the European Union, and they're much more excited about here in the United States. Less regulation, interest rates are a little bit more stable. In fact, they're moving down, and you have this broader incentive to invest here in the United States. And then if you get a lowering of the corporate tax rate, which I think is sitting at maybe 20 to 21%, and I think the move is potentially to move it down in the mid-teens, well, that'll be very attractive from an investment standpoint. Now, the CFPB, which is the Consumer Financial Protection Bureau, might be one of the bureaus that Elon Musk and Vivek Ramaswamy might be looking to give the axe to, but they've taken steps to place Google under formal federal supervision. This goes along with potentially PayPal, Apple, and Amazon, as they are looking to finalize a broader set of rules to impose supervision across the tech industry that offer financial tools and services. I wouldn't lose sleep if the CFPB and anybody that worked there lost their job in a few months. And I don't care if that offends you. Moving over to Microsoft, start of the week at 423, sliding down about 2%. Finish the week 415. You're going to want to see this one technically as well. OpenAI is applying new techniques to train models as its performance plateaus. There was all this talk about AGI and all this fear about artificial general intelligence taking everybody's job and universal basic income. When I worked at Brownstone Research, all these baby boomers would write in and be all concerned. Guys, these companies aren't anywhere close to AGI, not even close. These models have peaked in performance. In fact, we're seeing other companies, including Google and Anthropic, run into issues with plateauing model performance. This is because they are trying to have this broad model that literally does everything. It's like a super genius. And by all means, Anthropic and Gemini and OpenAI, they've created great products and they're a great utility. But what we are going to see in 2025 is a much more consolidation and a refinement of these models to be much more specialized. So they've already done it in computer coding. You could say maybe potentially in blog writing or natural language, but they struggle with math. They struggle with scientific things. These things continue to have to be narrowed down, and that is where the advancement is going to be. The fact that we're going to have one of these models that eliminate everybody's job and they'll just do everything perfectly is a pipe dream, at least in the shorter term. Now, the company is going to release AI agents early next year. AI agents is the ability to tell a AI bot, if you will, not a physical robot, but a computer piece of software where maybe I want to find the best price of airline tickets and I want you to book that ticket and do all these different things to plan my vacation. Well, the AI agents will be released early next year. Guys, for anybody that has ran a web scraper or any type of bot, this is just kind of the natural evolution of that. This really isn't anything revolutionary. You can have a version of an AI agent. You'd have to stitch together multiple programs. It might take a little bit more specialization. This is just bringing it to the masses. And again, this is not AGI. Now, Microsoft Azure business is going to be investigated by the FTC. And again, another division of the government, which if it got wiped out, I wouldn't really lose any sleep over it as an investor. But the FTC is going to investigate Microsoft for anti-competitive practices, even though that Amazon still holds a rather dominant position in the cloud computing business. You also have Google and Oracle and IBM having cloud offerings and certain types of offerings. But for whatever reason, the United States government wants to continue to investigate its best companies. Now, Microsoft is now the target of Elon Musk. We've got maybe some tech versus tech lawsuits. Tell you what, if this plays out in the court of law, you might see me there show up and report live from the courtroom as he's amending that OpenAI lawsuit to include Microsoft, because Microsoft's pocketbook is probably a lot bigger than OpenAI's. Moving over to Tesla, start of the week at 346. And we hit that gear stock upwards and hit reverse on Tesla as we reverse some of the gains, down about 7.4%. We're still up 44% on Tesla just over the past month as shares settled around $320 per share. Now, Elon Musk and my man Vivek have named to Doge, and that is going to lead Trump's government efficiency efforts. It's not a formal government agency. As I think if it was formal, they'd have to be approved by Congress, which may or may not happen with these guys. And also they would have to divest from many of their businesses, which I don't think either of them wanted to do. Now, both are pledging maybe weekly or bi-weekly live streams where they're going to be showing you all types of government waste. I've been seeing Elon get fed some of this thing by either Ron Paul or Rand Paul. Everybody is, this job is not going to be hard because there are going to be people shoving these people information, and we'll see what comes out of it. There are people doubting, certainly Elon Musk, which I don't think is a wise thing to do. People also doubting Vivek. I am not doubting either of these guys. I think they'll come up with something tangible here, not necessarily from a legislative thing or that even that the government will be able to act on it, but from an awareness standpoint, this is going to be big. Just like when Trump ran in 2016, he brought awareness to certain issues that people weren't talking broadly about, things like China, things like the border, other types of things. He brought awareness to them to where now they're some of the most important issues. And so if we bring awareness to government waste, government spending, well, that could potentially become a bigger issue in future elections. And when you're sitting on $35 trillion of debt as a government, and Social Security and Medicare are essentially insolvent, well, these types of awareness issues for future politicians to have to run on, it's only going to be a good thing. Now, XAI might be valued at more than $50 billion after a new funding round. Tell you what, Elon Musk can just set up a startup. They can have kind of a flimsy product, and you get a $50 billion valuation. Man, this guy just prints money for investors. Now, EV shocker, Tesla and GM and Ford may all benefit when the EV tax credit is pulled. President Trump ran on this, and I fully expect probably on day one, he'll actually pull the tax credit. So actually, if you're in the market for one of these electric vehicles, I would close that and buy that by January. By the time Trump gets into office, I would go buy this if you want this tax credit. Now, this tax credit used to be applied to your taxes, but now the companies are actually applying this tax credit at purchase. So this will meaningfully raise the price of EVs. Now, I've seen a lot of discussion on this. My view is this actually benefits, very much like this headline says, I think this benefits Tesla. What Trump also ran on is not just the tax credit, but the EV mandate that forced GM and Ford in particular to make a certain percentage of their vehicles electric. Now, without that mandate, GM and Ford are just going to be going back and making the diesel and the F-150 in fully gasoline models. The Lightning, as we reported on a week or so ago, that is not even selling. In fact, they've stopped manufacturing it because they have enough inventory to survive for many, many months likely. So this is great for Tesla, because they're going to be going back to being the dominant EV of choice. This will benefit their charger network, which in my opinion is the moat around their EV business. Any of these companies can make an EV. Most of them actually can't make it profitably, but to charge the damn thing, you are going to need a Tesla charger. So if there's a lot of EVs on the road, that is going to become a big and bigger business. Moving over to the technical segment of the show, the S&P 500 has pulled back at a very logical level. In fact, you got a little overextended over we've got multiple channels here. You're looking for the S&P 500 probably to pull back, fill this gap, pull back to the 5750. Depending on NVIDIA earnings next week, we could get a deeper pullback. You get deeper pullbacks. I think you know what you got to do. Now, Meta broke a level of support. This is good news. If you want to get into Meta, some of you guys just want to open up your Robinhood account and see it go up every day so you can take a screenshot and brag on Instagram. I don't want to do that. I want to buy more of these companies, certainly in this environment that we're heading into, lower taxes, lower regulation, the EU basically regulating their companies to death, lower interest rates. I mean, this is all bullish for all these companies. So you want to see these darn things pull back. With Meta, I think you start buying, when you get into the mid to low 500s, and we're getting there. Now, moving over to Apple, just kind of hanging out, consolidating into range. You'd like to see this one pull back to 208. That would be an exciting level. Amazon moved up to the middle of the channel. This is why we put lines in the middle of the channel. It can be a resistance area. It proved that way with Amazon. Pull back to an obvious level of support and bounced right off of it. Look at the highs here were 200. And so you, on the recent pullback, you found 200 and you bounced right off of them back to 202. It's not a big bounce, but you would expect demand there. Further pullbacks, and Amazon absolutely should be bought. Even if you have tariffs, there's still plenty of opportunity there. Netflix, on the heels of Mike Tyson hopefully knocking out Jake Paul, this thing just moves to higher highs. I mean, nobody cares about Netflix stocks. I put a video about Netflix. Nobody cares. I talk to investors. They're like, I don't care. I didn't like this stock at 600. I didn't like this stock at 700. And it just keeps going up and up and up and up. Now, moving over to NVIDIA. There we go. This one's setting up, I wouldn't say at the bottom of the range, but certainly not at a high. We've done other earnings videos where NVIDIA was setting up at the top of the range, and we were like, man, they would have to really do some crazy stuff to get this one to pop. I think what Wall Street, if you kind of buy into like the Wall Street kind of manipulation thing, well, they've manipulated this one at the bottom of the channel. And so you could have that pop with NVIDIA. You could have that pop to the middle of the channel, or even to a new higher high back into the 200s. Now, the other thing that could potentially happen is this breaks down. And I want to remind you that we are looking at a secondary channel with NVIDIA. It's basically like a straight up, it's like almost like they took some of those erectile dysfunction medication that Amazon is starting to sell, and things went up. With NVIDIA, yeah, they could break down, and there's going to be all these news stories. Oh, NVIDIA's lost its mojo, whatever. Well, it would just be a break of a breakneck trend. We still have this trend all the way down here. It's ridiculous, but the long-term trend would catch this one at $5 per share. Now, if NVIDIA goes to $5 per share, the great financial crisis will look like a small thing. So this is not super microcomputer. I'm not predicting this. I'm just showing you. There is a much, much longer uptrend here. What we've been analyzing in is really just the very steep 2-year trend. So if you do get a break of trend here, we didn't break the long-term trend. The dominant trend is still up on this one. So even if you break this shorter term, we'll take this channel line on and we'll reestablish to a new one. We'll certainly look at that when we get to Microsoft. Google is just kind of inching its way back to a higher high. You would really like to see Google make its way back up to a higher high, back up to $200 per share. Maybe some deregulation stuff, maybe a bullish report out of NVIDIA this week could shoot it up there. Now, Microsoft, to give you an example, Microsoft was on a breakneck trend. It broke free of that, but you still have multiple uptrends still in this one, a much longer term, intermediate term. Pretty much every trend is higher. You've consolidated very tightly over the past several weeks, right here in this low $400 range. I think this could be an accumulation area, certainly a bullish report out of NVIDIA would be bullish for Microsoft as well. Let's switch back to a daily view over here on Tesla, and we are seeing that we meet some resistance. I mean, these channel lines, you put these on here, and I swear I don't move these things. This purple channel, I think, is the new channel that we're in, and we met it right at the top, and you have pullbacks. So when you get oversold on here, some people like to put oscillators and all this stuff on your chart. No, just draw the trend lines in. This is going to tell you what you need to see. Tesla pulling back to an area of support back here at about 310, found some footing, bounced off of that. I think what you could do is divide this channel on half with Tesla, and this one still looks really good. We've just confirmed a new higher high on Tesla. We're confirming higher lows, and with the Doge and the permanent residence in Mar-a-Lago now for Elon, who I don't think has his own home, so maybe that's why he's hanging out in Mar-a-Lago so much. I think Tesla is going to have a great year. Can it hold the $1 trillion valuation? Maybe. And certainly their robotaxi is going to get fully approved. The fact that you have the EV mandate get pulled, that's going to help this company a lot of bullish tailwind. Certainly when you cozy up to an upcoming president, that only will help things. Folks, that was the FAANG Stock Recap Show for Friday, November 15th. We've got Iron Mike returning to the ring. And we've got a lot of exciting things going on in the market, including NVIDIA's earnings next week. Stay tuned to the channel for that, and we'll see you again next week. Have a safe and fun weekend. Good luck with your investments.